everyone now wants to trade. All right, it's pretty fun. It gives you a lot of emotions, dopamine, etc. But
Yeah, and honestly, it gives you like power. I would say, I feel like a hero, trading view, and I see all these like.
you may feel like hero, but in fact you are. You may not know, but in fact traders are very important for the market. And have you heard of the thing that's called Gold Trump Award for traders or something like that? In fact, traders give you every move on the market is caused by traders, not by hedge funds, not by any other investors. In fact, every move on the market. So, in fact, you are a hero. You are the man who's pulling the strings right here. All right. The biggest problem in trading is managing risk because everything is about risk management and making sure that maybe you can't predict the future, but you can make sure that the risk of losing is a little bit less. The risk of losing is a little smaller than the chance to win a trade, right? We've got many forms of managing risk. For example, you can just put a simple stop loss. It's a very popular form to manage a risk, right? But the fact that stop losses are very hard to put in a correct on a correct spot on the market. It's very hard. You may think that stop losses are not that very useful, and maybe dollar cost averaging is a better form to manage risk, right? So the problem with dollar cost averaging is that you may encounter some problems with the fact that you are indeed risking much more money by doing this. Because what is a dollar cost averaging? It's a form of managing risk that includes putting another trade within the movement of the price. So for example, if you put a trade on a gold at the price of $100 and you're putting a short there, you may encounter a problem that the price is indeed going up, no down. So then you may want to add another short at, for example, 110, and then another short at 120, and you can add another trade and another trade, and maybe eventually the price will go down. But it's a little bit of a gamble, right? So it's not easy to do. So maybe another form that you may find interesting is hedging. Hedging is in fact a form of managing risk that where are we even heading to? What's hedging? What's it whole the hedging thing about? It's about putting a reverse trade while still holding the previous one. So for example, you are buying some asset and the price goes down. So instead of closing a long position, you're just putting a short position while still holding a long. So when the price goes even further down, you can, for example, close a short position with some profit, and then, for example, add another long position, which is a form of combining dollar cost averaging and hedging at the same time. That's how I personally, that's my personal favorite form of managing risk, because you're, you are trying to avoid a cost of gaining a loss from, for example, bad long position, and you're just securing your own loss with short position that's gaining a much more that's making you a profit, which you can use to cover your loss at the long position, right? So yeah, I want to show you my little trading station. It's, you know, every trader has like this his favorite spot to trade. It may be your house, if you have one, if maybe your flat, your room. Unfortunately, I don't have neither of them, but you know, I needed to find my own place in this world. So maybe it's not a, you know, great, maybe it's not something that I should be proud of, but and that's my little point of accomplishment right here. So let's go.